Welcome back to Digital Asset Daily. In our last video, we discuss how to make money with crypto arbitrage. Today, we'll be continuing where we left off and discussing how to arbitrage Bitcoin. The Beginner's Guide to Bitcoin Arbitrage. The fact that each Bitcoin exchange shows its own price for Bitcoin has given birth to the arbitrage phenomena. In this post, I'll explain exactly what arbitrage is and how it is conducted. Bitcoin Arbitrage Summary. Bitcoin arbitrage is the process of buying Bitcoins on one exchange and selling them at another, where the price is higher. Different exchanges will have different prices for Bitcoin, and some people manage to take advantage of this to generate profit out of thin air. That's Bitcoin arbitrage in a nutshell. If you want a more detailed explanation of Bitcoin arbitrage and how it's conducted, keep on reading. Here's what I'll cover. 1. How Bitcoin's price is determined. 2. A simplified example of Bitcoin arbitrage. 3. Barriers to Bitcoin arbitrage. 4. Bitcoin arbitrage calculator. 5. Frequently asked questions. Is arbitrage illegal? 6. Conclusion. Should you try to arbitrage? 1. How Bitcoin's price is determined. Bitcoin's price is determined by supply and demand on the market. When demand for Bitcoin increases, the price goes up, and when demand falls, the price drops. The price of Bitcoin is also affected by various other factors, such as 1. Market sentiment. The overall sentiment of the market can have a significant impact on the price of Bitcoin. Positive sentiment, such as news of institutional investment in Bitcoin, can drive up the price, while negative sentiment, such as news of a crackdown on cryptocurrency exchanges, can cause the price to fall. 2. Network usage. The number of transactions on the Bitcoin network can also affect the price. High levels of network usage indicate strong demand and can push the price up, while low levels of network usage indicate weak demand and can cause the price to fall. 3. Mining costs. The cost of mining Bitcoin can also affect the price. When mining costs increase, it becomes more expensive to produce new Bitcoin, which can cause the price to rise. 4. Regulations. Governments and institutions' regulations on cryptocurrencies can also affect the price. For example, a country might ban or restrict the use of Bitcoin, which can lead to a fall in the price. 5. Media coverage. Media plays an important role on shaping public opinion. A lot of times they're responsible for FOMO or FUD, fear of missing out or fear, uncertainty, doubt, that can affect the price of Bitcoin. 2. A simplified examples of arbitraging Bitcoin. Let's take a simple arbitrage example in order to illustrate how arbitrage is done. 1. Let's say that on exchange A, the current price of Bitcoin is $50,000, while on exchange B, the current price is $51,000. 2. The arbitrage trader identifies this price discrepancy and decides to buy one Bitcoin on exchange A for $50,000. 3. Next, the trader transfers the purchased Bitcoin from exchange A to exchange B. The transfer may take some time and incurs a fee. 4. Once the Bitcoin arrives at exchange B, the trader sells it for $51,000. 5. After subtracting the trading fees, withdrawal fees and transfer fees, the trader calculates a profit of $500 on the trade. It's important to note that the above example is a simplified version of how crypto arbitrage works. In reality, there are many more considerations and factors that need to be taken into account while executing a crypto arbitrage trade. The market conditions can change rapidly, making it hard to predict the profitability of the trade. Also, the transfer times and the volatility of the market can affect the outcome of the trade. Additionally, while identifying the price discrepancies can be easily done by software, executing the trades and transferring the Bitcoin between the exchanges can take time, making it challenging to take advantage of the opportunity. It's always important to conduct your own research and assess the risks before engaging in any form of investment or trading activity. 3. Barriers to Bitcoin arbitrage. Bitcoin arbitrage like any other form of trading, is not without its barriers. Here are a few of the main barriers to Bitcoin arbitrage. 1. Spreads. The difference between the buy and sell price on an exchange is known as the spread. The wider the spread, the less profitable the arbitrage opportunity. Spreads can vary widely between different exchanges, and can make it difficult to make a profit on small price discrepancies. 2. Fees. Trading, withdrawal, and transfer fees can eat into profits and make arbitrage less profitable. Some exchanges also charge higher fees for certain types of orders or trade sizes, which can further reduce profitability. 3. Liquidity. Some exchanges may not have enough liquidity, making it difficult to buy or sell large amounts of Bitcoin without moving the price. 4. Transfer times. The time it takes to transfer Bitcoin between exchanges can vary widely and can make it difficult to take advantage of price discrepancies before they disappear. 5. Market volatility. The crypto markets are highly volatile. This can make it hard to predict the future price of Bitcoin and make it challenging to execute the trades. Additionally, the prices can change rapidly, making it hard to catch a good opportunity. 6. Regulations. Some countries or exchanges may have stricter regulations on crypto trading, which can limit trading activities, or can make it difficult to open an account or transfer funds. 7. Security. As with any online activity, crypto trading and arbitrage entails some level of risk and can be susceptible to hacking and fraud. Thus, it's important to keep your information, assets and software updated and secure. It's important to note that while these barriers can make Bitcoin arbitrage more challenging, they do not necessarily make it impossible. Arbitrage traders can mitigate these barriers by using automated trading bots, researching different exchanges to identify those with lower fees and faster transfer times, or by trading smaller amounts of Bitcoin. Additionally, it's important to keep an eye on the market conditions and regulations and adjust the strategy accordingly. That concludes today's video, but don't worry, we're not done yet. In our next video, we'll be covering Bitcoin arbitrage calculator and FAQs. Make sure to tune in and subscribe to our channel so you don't miss it. Thank you, lovely viewers.